Prop firms have been taking people's money right out of their wallet for years and years, and they're going to continue to do so. Trust me, you don't want to be like the guy who continues to buy challenges, max out a credit card, open a new credit card, or jump to the new credit card, do the exact same thing, and continue the cycle, only looking for this magical funding that's going to change their life and make them this profitable trader making millions and millions of dollars because they can get access to hundreds, maybe even 500, maybe even $1 million of other people's money. Prop firms prey on the mentally and emotionally weak. And unfortunately, especially in today's society, that is becoming more and more prevalent. If you ever get a chance to listen to some podcasts, interviews, and dive deeper into the prop firm space, some of the people who are on the backside who know the numbers, it's like 90 plus and maybe even more like 95% of people who buy prop firm challenges or these audition phases that they can try to prove that they're profitable, over 90% of them never actually get a funded account. Many of these accounts aren't actually real funded money, but they never make it to that phase where they can withdraw any profits. And of the people who even get past the initial evaluation stages, there's even a smaller amount who actually continue to be profitable, make money, and then be able to withdraw that money before losing it or at least breaking one of the rules. But why is this the case? Like, you'd got to think that that number should be closer to 50%. Not saying that 50% of people are profitable consistently long term, but instead of 90% failing, maybe it's like 75, 70% failing and never actually getting to the funded stage of a prop firm. Why is that the case? I mean, just think of flipping a coin, right? Like, it's at some point you're going to be right. Like, some people are going to make it there, but that's not the case. It's actually wrong to even think that. And there's a lot of reasons why. First things first, the audience that a prop firm appeals to, there's a certain demographic. You've got people, ideally, who are fairly new or starting out in the first couple of years of their trading journeys or their careers, if you want to call it that. And most of them never really make a career out of it, but let's just call it a career to make it simple. This audience of people, they think that they can get more money faster and that this is the best route rather than growing a small account. Or they see all of the fancy cars and the flashy things on social media and they want to get there as fast as possible. And so this is the way to do it. This is the way to now say, yeah, I got a $100,000 account that I trade, and make a couple percent per week. And like, I pull it out, it's a couple grand. Like, that is the mindset that a lot of these people have. And that's not a great place to be in because it's disregarding the actual process of what's going to get you to pulling money out and the consistency and the actual trading strategy and all that goes into it. There's also trading rules. I mean, there's trailing drawdown rules on some prop firms. Many are going away from the trailing drawdowns to make it a little bit easier on managing risk. This way, if you're up unrealized gains on something, then all of a sudden, it falls back against you, you can't lose the account even if technically you didn't even lose any money. It just went really largely in your favor and then it came back to break even and stopped you out. Sometimes because of trailing drawdown rules, people could actually lose their account because they broke the trailing drawdown of whatever percentage it is, 5%, 8%, whatever the number is. Stop losses, some prop firms require you to have stops, some don't. That could throw you off mentally and it just makes it more challenging sometimes to now have to always put a stop loss on, easily get stopped out. And then many prop firms have gotten caught, and now we've been seeing more and more coming out, that have been messing with fills, messing with orders, widening spreads while positions get close to people's stop losses. Yeah, like that throws it off. And many people don't necessarily trade the way that you're required to trade once you now sign up for a prop firm. There's also asset classes. So maybe you're used to trading stocks and now you got to trade futures and you can't trade stocks, or maybe you're used to trading this and you got to trade that. And there's just some restrictions upon the asset classes that you can trade depending upon the prop firm you choose. And that really shouldn't be a huge problem. But for some people, that is something that is important and can throw them off their game. And let's not forget the biggest and probably the most obvious point here. Trading is fucking hard. Like, it's not an easy thing to be able to do. It can be simple, but simple is not easy. And if all that is not enough, the simple concept is just being taken advantage of. The motherfuckers who are trading on a prop firm are not profitable. Most of them, I would argue probably 90+%, are not actually consistently profitable and have not proven that in their own trading for a sustained period of time. They don't have an edge, they don't track their trading data, and they switch up their trading strategy the second they see someone on YouTube post this new strategy that made them $20,000 in 5 minutes. That's not the recipe to beat the prop firm, and you're not beating the prop firm. They're going to win. The game is now you really pulling from the pool of the 90+% who keep buying, losing, you pulling from that pool and getting your piece out of the pool if you're profitable. That's all it is. Back to that simple versus easy. The recipe to being successful with the prop firm is quite simple. It's not easy. Prove you're profitable, whether that's on a simulation account, whether that's in your own account, on a smaller account. Prove you're profitable to yourself. Trade for 3, 4, 5, 6, 7, 8 months and be like, yo, I'm profitable. I have traded this way for a long time. I'm feeling really confident. Like I've got it down. I know what I'm doing. I know how to handle myself in drawdown. I know how to handle myself when I'm on a streak. You've had the experience of being profitable, and obviously you probably have had the experience of not being profitable for many, many years, months prior to that. So you at least come into this with the confidence and the understanding that you know what to do. You're just looking for a little extra funding so that now the dollar amounts mean a little bit more. I hear people say all the time, well, the way you're going to trade a prop firm, evaluation phase is different from how you're going to trade normally. What the fuck is that? Why? Why would you trade any different when you pass the evaluation? Doesn't make any sense. You would just trade the same way you were trading before. Now with the prop firm, maybe the broker's different, the executions are a little bit different, but you trade the same concept, the same way, the same strategy. And then if you get funded, you trade the same exact way. There's nothing to change. And that occurs when it occurs. There is no time limit. Now, some of the prop firms have time limits, so you got to be careful of that. That's another component to why it's hard, right? Why it's even harder than regular trading your own money, I guess. But it happens when it happens. You size accordingly to the account size so that one trade's not going to blow me out, right? It's going to take 5, 10, 20, 30 trades that I would have to lose, maybe not in a row, in order for me to hit these drawdown requirements, which then means it's going to take 50, 60, I don't know how many trades total for you to get past the evaluation phase. And you just back your way into that math. How many trades do I take a week on average? And then you size accordingly so that this is something that you give yourself plenty of time to do, but you're not rushing through it just to try to get funded, do things that you don't normally do. Maybe it works. Maybe you get lucky. Likely you don't, and you have to rebuy the challenge anyway. But if you do get lucky, what ends up happening is then you get to the funded phase, and then you lose your money, and then you break the rules, and then you lose the account. So what's the point of getting funded if you're going to lose the account anyway? Doesn't make sense to me. The progression that you can see once you're funded and the scaling up that you can do in your own with your capital now, your capital that you've earned, is really remarkable, and that will come as long as you're patient. And it can come quick. Think of it as like an exponential curve, right? If you're profitable and you get funded, you can start stacking some capital away. That capital you can either use for your own needs, your own income, whatever, or you can put that in an account and save it for your own money, so then you can trade your own money ultimately as you build that account up. Or that money will then allow you, those profits then allow you to buy a larger account size. So then if you pass that account, now guess what? From 50K, 100K, 200K, 500K, you now have a lot more capital to play with, and a 1% gain in a given week starts to become a lot more meaningful. Again, just think of that exponential curve, and that's what it comes down to. If you want a place where you can track, journal, log all your trades, I'll link up TradeZella below this video. Highly recommend you at least know your data, know your numbers before you ever sign up for a prop firm. Many of the prop firms you can even track through TradeZella, so you can track all your stats and data with the accounts you're trading on a prop firm evaluation phase. Thanks so much for watching. Leave a like, maybe subscribe, and I'll see you guys in the next one. Peace.